What's going on, everybody? Welcome back to the channel. I appreciate you stopping by, spending a few minutes of your time here with me tonight. Tonight, I want to go over with you entries. All right, we haven't really talked about entries recently, so I just want to go over this with you quickly tonight and keep it as simple as possible. All right, and I promise you, there are no like secrets I'm keeping from you with entries or with any part of the strategy. All right, I'm giving this to you to the best of my ability. All right, now some things as you continue your trading journey through experience, they become easier and easier, right? And some things you will discover work better for you than others. All right, but this is as simple as it can be right here. All right, so with this slide, what I'm showing you is the previous day's low, the previous day's high, and the previous day's closing price. All right. This second day, and this isn't very important right here, right? But we put in this low in Tokyo, right? Right below closing price, and this market begins to pump up until the New York session where we break out of the previous day's high, right? And then we get our reversal up there at that level, and the market falls, takes out that low, takes out the previous day's low. So we went from high of day to low of day. We've got a 3-session setup. The master pattern is in effect here on this day, right? And if we zoomed in right here into this blue box at that level, right, we want to see a reversal pattern, right? And one of the main ones that I'm looking for is this double top pattern, or how I usually refer to it as an M at the high of the day, okay? And that's what Stacy talks about too. M's at the high of the day, W's at the low of the day. All right, so this is the reversal pattern. I like to get in at the break of this middle structure of that M pattern, all right? The reason for that is because if we hop in over here as soon as we see these first two red candles, right? Because we think, all right, we've broken out of the previous day's high. We've started to go lower. So when we break this, when we break, what the hell is happening here? My bad. People might think when we break the bottom of this green candle that that's your entry, right? And then the market goes back against you. You get stopped out, and then it goes in your direction, all right? Stacy calls that the first mouse, all right? We enter on the break of that middle structure to avoid being trapped as the first mouse. We get in there and the market does not come back against us again, okay? When the trade is there, when it's a good trade, it's not going to come back against you. Now, this is also important to understand if you're going to be using different time frames, all right? Because some people want to enter on the 5-minute, some people want to enter on the 15-minute, okay? And other people like me are trading on the 1-minute chart when we get to the level. So on a 1-minute chart, you're going to have this M pattern, okay? This same M pattern on a 5-minute chart is going to be an engulfment. And that same engulfment on a 15-minute chart is going to be a pin hammer, right? That means that this pin hammer on the 15-minute chart is an M pattern on a 1-minute chart. That way you can look at your 5-minute chart, see this engulfment, and know that this is a double top, right? You can see the wicks, okay? That's a double top. It's an M pattern, right? Okay, so if you're on the 5-minute chart, you're entering at the break of this green candle, right? You see what I'm saying? The 15-minute entering on it, I always enter on the 1-minute, but you would be entering somewhere kind of near the bottom of that. I don't have a specific place for you to enter on a 15-minute chart, right? Maybe after this pin bar, when we break that pin bar, the next candle, that would be your entry on the 15-minute chart as far as I'm concerned, okay? So that's the entry criteria. That's as simple as it gets. You don't need to overthink it. You don't need to, complicate it any more than that. We're going to take a look at some chart examples. All right, we're going to look at DJ. We're going to look at gold. We're only going to look at 2 examples, okay? And then you can go to your charts and you can start to, lock this into your brain, right? So here we're looking at the DJ on a 15-minute time frame, okay? You can see we have this 15-minute pin hammer at the level, okay? We are at the current day's high of the day level, which is also the previous day's closing price, okay? And this is a level, it's not a specific price, it's an area, okay? It's an area. I picked the top of this. You can see the range that I chose, right? The wick of this candle and the body of the previous little candle right there, okay? So that's the area, that's the level. The market's making lower lows on the day, lower lows here in London, then it pumps back up into that New York open, that 9:30 timing window, back into that level. We get our pin hammer on the 15-minute chart. On a 5-minute chart, you can see, right, we have this engulfment right here, okay? And on a 1-minute chart, we have this shortened M formation. Sometimes when you're looking at these charts, you have to use your mind's eye to visualize these patterns, okay? Because you can see we have this leg up, right? So we go up, then we got this white candle, which would be a red candle, right? So we go up, down, and then the next candle opens and we go up a little bit more and then down. That's our M. That's our M pattern there, okay? It could be considered an A top reversal to some people, but it's a shortened M to me, right? The break of that middle structure of the M would be right there, or that green candle, okay? Now we're looking at gold. We've got a 15-minute pin hammer, right? It's also an engulfment, right? But it's a 15-minute pin. When we zoom in on the 5-minute, you can see that engulfment, right? And the level that we're at, you can see it better here, right? This market's been making lower lows. Here's our most recent high and low range before the session opens. You can see we put in this low, and then this market pumps up into the 8 o'clock hour, back into the previous high, right? Before giving that engulfment. And then on the 1-minute chart, you can see we have our M pattern into that level, at that level. Okay, we have this M right here, all right? But also right here, this is an M. We go up, down, okay? That's it. The break of, I'm using this big M right here. The break of that middle structure, the bodies of those, you could wait to the wick, all right? Sometimes I do that, but this is good enough for me. We break that middle structure. There's the entry. The market does not come back against you, right? And you don't enter right here. When we first get this, you need to see the M pattern, okay? You need to see the middle structure of the M pattern. Don't get into the trade until you see that M pattern completed, okay? Including that middle structure, right? Because if you enter over here, right, again, the market is going to pull back against you, stop you out most likely, and then continue in your direction, all because you jumped the gun, you got in early, you didn't wait for the full pattern. Okay, so you got in on this first leg down of the M, but you want to be getting in on the second leg down of that M pattern. All right, I hope that makes sense. So that is the simple breakdown of how I'm using these patterns to enter the markets at the levels, okay? And of course, timing is important, but I'm just trying to show you the entry criteria. When we're on gold, okay, gold can move slightly earlier than the indexes, right? The indexes open up at 9:30. Gold, sometimes it starts moving as early as 8 o'clock, okay? 8 o'clock, 8:30, right? But the indexes, we want to see this pattern like this one is being completed at 9:30, okay? So before 9:30, just before 9:30, you can see the completion of the M pattern, okay? So if I come to my charts and at 9:30, we only have that first leg up of the M, in my head, I'm like, okay, then we might be waiting until 9:45 for that M to be completed, all right? Or if we only have the first leg of the M pattern at 9:45, I know, okay, maybe I'm looking for a 10 o'clock entry into this market, all right? So I'm using 15-minute timing rotations, all right? Give or take a couple minutes. It doesn't have to be right at 9:45. It could be at 9:48 or 9:37, all right? But approaching those timing rotations, right? You understand? And that's how I'm gauging it. So I hope this video makes sense. Until next time, I hope you continue to free your mind.